exciting actually when you go into a new month. So what I want to do is I'm going to take you through the markets that I trade and just give you my thought processes as the month is starting and what I'm going to be doing tomorrow on the first day of the month and how the monthly structures influence my trading. So I'm trading 4 markets. Now, I would love to have a look at another market which doesn't have all these preset lines that I have because I'm actively in this market. So a lot of things are just carried on from previous months. So if you have any market that you want me to look at some time, just put it into the chat box, and then I'll just pick up one. But I hope it's not anything exotic that I can't find, on my market here. So would love to look at any other market besides the ones that I'm trading. And if you have any questions, guys, just pop them into the chat box. We got time, and I think I'll get through to all of them. Well, here we go. Hang Seng 50 monthly chart. Now, this is what I recommend if from a price action perspective. I recommend you go through this process with all the charts that you're looking at. If you're looking at one market, fantastic. If you're looking at whatever, 12 markets, 20 markets, it doesn't really matter. Those are the markets that you trade in, but you need to go through the process so that, you can start to grasp the influences in the market that you are trading. So Hang Seng 50, just have a look at it. I mean, the thing that I say to myself, you see when I get to open any of the charts that, you pop into the box, I'm always saying to myself, what's clear, what's distinct? If I had to do something, if I had to do one thing in the market tomorrow morning, if they say to me, George, there is a ton of cash, you have to take a trade on the monthly chart, what are you going to do? Well, if I had to take a trade on the monthly chart, I would be selling, shorting Hang Seng 50. Why? Huge bear breakout. Cleared all these lows here, going back to, well, at least, I mean, this, you can see this all the way back to 2009. Anything else within there, the market has completely cleared it for you. So if I had to do something on Hang Seng 50 on the monthly time frame, I would be shorting. Okay, so that's the very first bit of information. Then if you kind of zoom in a little bit, I mean, if you were a bear when the market closed on Friday, you'd have been pretty disappointed, right? Because huge sell-off, pullback, the bulls were pretty excited, yeah, but, as a bear, this is just a pullback, and it turned out to be potentially a pullback. It could be a reversal, but after we got this inside candle in February, the bears were saying, fantastic, all of this bullish excitement is just a pullback in the market. So we're going to sell. So they set up a nice inside candle, which is breakout mode in the direction of the previous trend. So if I say this on the 5-minute, I'm selling beneath this candle. So that's what everyone did. The monthly bears, this sell was triggered. So the month was bearish. So all the bears needed to do last week and on Friday was just to close with a little bear body. That's the least they could have done. Given us a doji, fine, but it should have been a bear doji in favor of the bears. But now that we got a doji, which means trading range, indecision in the market, confusion in the market, but it's sideways price action that has been set up. So this bear doji from March kind of creates a little bit of a problem for the bears because the bears triggered the sale. They wanted this thing to sell off, and it didn't. And what the least they could have done would have, like what we had here, this was way back in August, a little bit of a bear doji, so you still control the market. So what this has created for the market, we are in a bear channel. If you connect this lower high and that lower high, and they just anchor it down here, we are in a bear channel. As a short was triggered, and as far as the bears are concerned, disappointed, but we're at this key level. this level here in gold is an absolute key level you should have marked on your charts if you are trading this market. It's a big round number. Anytime you see big round numbers on your price axis, you have to just mark a horizontal level because everyone sees them, computers see them. That's a key level, resistance and support. But something else about this number, it's a 50% midpoint of the 2022 range. If you look at the range of 2022, that high, that low, that's spot on in the middle. So it's a key level. There are key levels that we mark on the chart. Whenever I'm trading, I will have marked this key level, 50% midpoint of a distinct range. When I go down to the 5-minute, I've got 50% the midpoint of yesterday's range because the market is going to watch that. If you are a bull, you don't want the market to go below that level. If you are a bear, you want the market to go straight down, break through that level. If the market is below that, as a bear, you don't want it to go above the midpoint. Bulls want to get above the midpoint. So that's a key level. But also, this level is a 50% midpoint of ATR there in my notes, all-time range. If you look at the all-time high, all-time low on this chart, that's the midpoint. So this is an absolutely key level. Market has tried to break above it, below failed, broke out beneath it, came back above it, failed. So you can expect a lot more violent and dramatic price action until we get away from that range. If you were watching the euro versus the dollar last year, at parity at 1, you could see euro versus dollar price raised to that level, stayed there, broke below it, came back, went above, it just carried on oscillating around it. That's like this level here. So 20,000 is a key level on Hang Seng. Now, we are in a bear channel. So as far as the bears are concerned, if you were in this on the monthly time frame, you're not going to exit your shorts because your stop is not here. That's not where you put your stop. Your stop is at this technical level. You only move your stop down here. If we accelerate down and take out this level, then you tighten your stop. So the bears, they're on holiday doing whatever. They're not worried about it. They're relying on their stop up there. So when you go into this month, you have to expect that because of the doji in the previous month, the extremes of this doji trading range, the extremes of March are going to be key levels of support and key levels of resistance. When the market gets up there, I'm going to leave this line marked on my charts. When I see it appearing, I can expect something dramatic to happen. The market might create a decent enough reversal of this level and sell off. Fantastic, I'll be in it. Or it might break out above it. I'll look for reversals, breakout, pullback, and go long. But this level here, this bear channel level is absolutely key because if the bears are strong, no matter what happens, when we get up there, they might come back and just create something like this, sell off in the month, and they have more dramatic selling. So key levels, bear trend line, 20,000 highs and lows of that month. When I then go down to the daily time frame on Hang Seng 50, look at what happened on Friday. I'll talk about this and how it's influenced my thought processes for tomorrow. But just before we do that, everything we saw on the monthly, now we get a little bit more information. So the lower you go down in time frames on your as a price action trader, the more information you get. So when I'm trading the 5-minute, there's just this information everywhere, and I can make decisions about it. As a price action trader, the 5-minute is replete. It's full of information to help me make decisions. I'm making decisions based on the price action. So going into tomorrow, just have a look at what took place here. I got so many lines, more than I need, but for illustration purposes. Big bear breakout, but within here with a tight bear channel. I just want us to observe what took place here and here. Tight bear channel, and that tight bear channel carried on until we broke out above it. Now, what we had here was a failed breakout below a tight channel. One of the patterns that I trade, and I talk to traders about it in Wednesdays at the market with George, when you see a failed breakout below a channel. If we get a failed breakout, second one above the channel, then you got to expect the market to sell off. Beautiful gift, sold off fantastically. Now, then go to the bottom of the channel, went back up. The reason I'm pointing that out is there is a high probability that what took place here may take place here. In this case, we may be starting off with a failed breakout. See this channel in black here, that high, that low, bear channel. We might be getting a failed breakout above the channel. And if we get that and the market accelerates all the way down and we get another failed breakout below the channel, then you got to be buying that and hoping for acceleration. So the second failed breakout is what you look to trade. So there was a first failed breakout beneath a tight channel. Second failed breakout, decent enough signal, got to jump in and short. Now we're starting potentially higher probability for a failed breakout above this channel. And if we get that, you're going to trade that all the way short. But if you miss that for whatever reason, or you make some money, if we get down here and we get a failed breakout below and get a decent enough reversal by the bulls, then you're just going to go with it. But huge opportunity. Something else taking place here. So there is 20,000, that magnet that I spoke about. There is a bear trend line here. This lower high and this lower high that we had, which is the high of March. And we tried to break above it last week, dodgy, bit of a problem. Then we had a decent enough bull candle, outside candle for the bulls position themselves day before the month just to accelerate up, and they failed. Did go up, but did a decent enough reversal. Now, when I'm going into the market tomorrow, I'm looking at this and say, but hang on a second. Everything here is favoring the bears, okay? There's also a level here, this line here, low of 7th March here. Okay, after that second failed breakout, high test, outside candle, blah, 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 huge acceleration by the bears. So the bears are looking at it and say, well, here we go again. We have an opportunity to do the same thing and accelerate down. So the probabilities as far as Hang Seng 50 are concerned, into tomorrow, into this coming week, for me, are looking for short. So I'm going to open up tomorrow. My mind's going to be looking to go short. Okay, what happens, George? If the market doesn't go short and accelerates up, well, chances I'll be sitting and say, well, I'm waiting for a reversal to see if we bounce off here. I might miss it. That doesn't bother me. I miss a lot of trades, but I make a ton of cash when I do cash them. So if I don't get the bear acceleration from the beginning, I'm going to wait to see if I get a reversal here as the market tests this level or tries to break out above that level. Anywhere within here is a selling zone for me. So tomorrow I'm going to look for shorts. If this gets triggered and goes my way, I'm going to be shorting aggressively day after day until we get into the channel and below. So remember, there's no 100% certainty. We're not gamblers, we are traders. So I'm talking about higher probabilities. So I say to guys, if someone is standing away from you, it's a sniper, and we know good snipers. I think the 2Ks are 2 kilometers away, they can take your head off. But they say this sniper is 5 kilometers away, George. There's only a 10% chance that he can take your head off. And if you stay here, I'll give you $1 million. Are you going to stay? Of course you're not. 10% is huge. So when I'm saying higher probability, the market is going to sell off. Always remember, if it does something different, take your time, wait, calm, relax, and take the trades. So that's Hang Seng 50. Let's go into UK 100. UK 100 is problematic as far as the bears are concerned. Sometimes during the month, it was a huge bear candle, and the bears were saying, we got it. We're going to just sell off, break through all these levels, and just completely crush the market. But look at what happened towards the end. The bulls bought all the way up. This became a lotus candle, still controlled by the bears. So the bears still controlled the candle, but there's a lot of bullish momentum. As far as the bulls are concerned, they said, yeah, we know we didn't get a bull candle, no problem. But guess what we have? We have a higher low double bottom. Here we have a decent enough candle. We have followed through. So the bulls are going to be strong in this market. UK 100, their objective, as far as the bulls are concerned, is to follow through this buy-in and then try and get to this all-time high and accelerate up. They have a big problem because of all these lower highs. So the bears are going to be out in full force. But it's not as decisive and as clear as we could see on Hang Seng. So you can expect, I expect a lot more trading range price action in this market, which is not unusual. And this market tends to do that, a lot of trading range price action. But the bulls have an opportunity to follow through. So there could be a little bit more higher, George, not there could be a little bit more. Let's speak like price action traders. There's a higher probability that there will be follow through buying by the bulls. Spoken like a price action trader. Have a look at the monthly, at the daily. So going into the daily, the bulls want to follow through all of this buying. Now they took out that lower high. There was a key lower high. The bulls want to just keep on buying and keep on buying and keep on buying and get back up here. Of course, there could be pullbacks and high lows, etc. So this market at the open going into this week, there's a higher probability that there'll be a lot more buying, a lot more follow through by the bulls. That's what the bulls want. However, if you look to the left, the bears were still in control. Okay, that's the body that they controlled. Spoke about this. Bears still control the body. Bulls bought into the end. So there are levels that the bears want to defend. They failed to defend that. I mean, if they were strong, like Hang Seng, they could have given us a decent enough high test candle. So this is problematic for the bears. But into the zone that the bulls are now going in, very strong bearish momentum. They broke beneath this level, had follow through. This is a successful breakout beneath this. Breakout candle, follow through. So excellent for the bears. So even though the bulls have momentum and they might want to get up to there, you can expect the bears to come out. So if you're going into this market tomorrow, we all go into the market tomorrow, and at the open, you're expecting follow through by the bulls. Bear in mind that if we see a reversal pattern by the bears, you can't ignore it. It would mean you have to get out of your longs and follow the market, because the bears can come in a bit of a pullback. The bulls may still create a high-low double bottom and accelerate up. So this is probably making sense to everyone. I hope price action traders should be making sense. Wednesdays at the market traders, it should be making sense. If you're checking me out, live trading profits, 15 minutes every Wednesday, it should start to make sense. So that's the story. They expect bullish momentum. If the bulls are going to take over the market, they can't take over the market without a distinct higher low double bottom. I mean, this, if you look at the monthly, this was a little bit more impressive. You can say, oh man, look at that higher low double bottom and follow through. There is nothing as yet on the daily that can tell us the bulls have taken over. They have to create that. They need to follow through candles to get above these levels. As a high of 2022, probably will take it out just now to make our charts look cleaner. But they need to get above that. Then the bears, of course, will fight and box, come back, give us a decent enough two-bar reversal so we can say there is a good high low double bottom. Then we know the bulls are set up. Until then, they're still trying to demonstrate strength. Forget a decent enough reversal, fine. If you don't want to trade a market that's unclear, wait to get something like this. If you get something like this, even though you've said through 2, 4, 6, 7 days in the month here, it doesn't matter. If you wait for something like this, in this period, in a couple of days, you can make a ton of cash, more than anyone who's just bumbling through the market. Oh dear. So you don't have to jump into the market. That's my point. Wait for clarity. So you might say, okay, not sure. Wait for it. You will see it in a 2, 3, 4 days. Say, oh my goodness, that's a crystal clear lower high, or that's a crystal clear higher low. Then jump in the day after. 2, 3 days of good trading, make a ton of cash, and then you can take it easy thereafter. Okay, gold. Absolutely interesting story on gold. I mean, you can see all of the key level, 2000. Okay. They got to it, but they failed to close above it. Every time we broke above it, failed, broke above it, failed. But look at what the bulls did here on the monthly. Okay. Bull breakout. That's what the bulls are thinking. Bears, when this was forming, they thought, oh, just a pullback. Now we have a bear candle, but the bears failed to trigger the sell. Okay. There was a bear candle in February. All the bears needed to do was at least break below, if even giving us a bull candle, doesn't matter. But so we can see the bears had momentum, but they didn't have that strength and that power to do that. So as far as the bulls are concerned, they say, but hang on a second, this is actually quite beautiful, higher low, double bottom, and this candle cleared, in a couple of candles, and we had followed through. So as far as we're concerned as a bulls, this is just a pullback. That's possible. And although they failed to close above the 2000 level, have a look at what happened. This candle, March candle, closed above February, and it closed above January. So this is absolutely good news for the bulls. And it's a small tail. It's not an outside candle. So everything is staking up in favor of the bulls. Why? George, what's a big deal about an outside candle? Well, if it was an outside candle is a trading range candle. The same forces controlling an outside candle are the same forces controlling this kind of doji candle. It's a trading range. Then we start worrying about the low of the outside candle or the high of the outside candle and the resistance and support, etc. But this did not become an outside candle, and it closed above the previous candle. So it's favoring the bulls. So the bulls are saying, hang on a second, going into April, we just want to come out in force. We know all these guys have been, every time we try to sell them off, we want to get through April, close above these levels, or even get to a new high. It's not an impossibility. The price action story is telling us that. When we were down here, you'd have said, no, it's not likely to happen. Done your measured moves, and there you are. When you had this doji candle, you'd have said, oh, it's not likely we're going to get up there. But there is the measured move of the doji trading range, and we got there. So the bulls are simply saying, but hang on a second here. There is a low. If you look at this measured move tool here, there is a low, there is the all-time high. If we are strong enough to break above the all-time high, we're going to get to this level. Okay, that's where the bulls want to go. They want to get to 2.5 level, and it's highly possible. It is there. All they need to do, is, unlike all of this stuff where they kind of gave away ground, they can't do that. They need to have strength, close above these levels. We don't want a doji in April. If they can take it out in April, fantastic. But, bits and pieces is fantastic. Their initial goal, as far as the bulls are concerned, is here. And if they get here, they're setting themselves up for there. Let me explain why that's the initial goal. The bulls are saying there is a first leg. There is a first leg. There is a pullback. And well done for March. We closed above here. So to be satisfied, we just, since the first leg, pullback, second leg. The bulls want to get there. If they get here, that is their first level of satisfaction. Happy to be pulled back and then look to go up. But if they get here and they're giving us bull candles, then they have closed above 2,000, closed above the all-time high, and they are setting themselves to get up here. Then they start to think, hey, hang on a second, hey, we can do a measured move and get up there. So hugely excited. But there's always the other side. Sniper, 5Ks away, 10% stand, no thank you. There's the other lower probabilities that the bears just come out fighting, and they fight through this next few months, and their goal is to get back here to the big round number 1600 and take this out. If they get down there with their low probability, well, it depends. They give us bear candles, they might become high probability. But let's assume that they break out beneath here, I don't know, 3, 4, 5, 6 months from now. Then the bears are going to say, but hang on a second. The same thought process that the bulls had, we now have. All-time high, there is a low. We want to get down here and take the market down here, down to this level, the this is the measure move trade range of that level. Okay, that's what we just worked out. And also it's low of 2018. It's 50% midpoint of the all-time range, all sorts of fantastic things. And that level starts to get them down into this 1100 level. That's where, but the bears have to do work. But if they can do that, that's where they want to go. If you had to do something, George, you got to do something with this market. What are you going to do? I'm just going to buy. If I had to do something, I have to feel comfortable to put my stop here. There's nowhere else to put your stop except down here. When you break out above there and pull back, and then you can tighten your stop to that level. So there is a story on gold. And if you go to the daily, why can't I click on my daily? Go to the daily chart. I love these patterns, absolutely brilliant. Okay, this is a bull breakout we spoke about. There is a doji. Remember, every time you see a doji candle do a measured move, not a surprise to price action traders. The market go to the measured move of that trading range, the one by doji. So we're not surprised by these things because we can see them. As far as the bulls are concerned, down here, they could have said, well, first leg, these three breakout candles, fantastic. Up to there. Measured move, we got there. Measured move of one bar doji, we got there. They could then say this whole move is my first leg, and that's going to take us to that level that we've been talking about. There is their measured move on the daily. But a beautiful pattern has been created here. Whenever you see a converging triangle, it is breakout mode, BOM, which means the market is going to break out above that. There is absolutely no ways that the market is just going to create a straight line, like one of the things you see on the monitors. Beep. That ain't going to happen. So this is breakout mode. It usually favors the direction of the last candle. That is in the converging triangle. Well, the bulls could have done a bit better right up here, but we have a bear candle. Okay, so if it's a bear candle and it favors the direction, the converging triangle forces favor the direction of the bear candle, and we expect the bears to break out tomorrow. George, what about your case that the bulls may go up here? Well, the converging triangle forces, there are many steps to it. We break out of that converging triangle. That will be step number one. We always expect a higher probability that the market will come back to test the apex of the converging triangle. Maybe it's next day after or a couple more days, who knows? But higher probability to come back and test the apex of that. And then at that test, the market creates either a reversal pattern to sell off or a continuation pattern. So who knows what happens tomorrow? If the bulls are able to create an inside candle here, I can see this bear candle here. Imagine we have that tomorrow as an inside candle here. If we get another inside candle right at the apex, then the next day you're just going to find ways to buy. But if we sell off, remember converging triangle forces, apex test, then look at for reversal pattern. So pretty exciting. I'm going to be keeping my eye on this market, although my higher probability is to go along with it. So I'm not in a rush. I'm not going to just jump in and sell, even if I said I'm going to wait for what I believe is higher probability. Finally, euro versus yen. So you can trade euro versus dollar if you want. You can trade USD versus yen. You could just do a cross and look at it monthly and say, oh man, doji price action. I love it on this currency cross, because then I'm looking for reversals continuously. Whenever I see a one bar doji, it just makes life so much easier. There's not much thinking to it. You can just say, what's the measured move of that? Well, if we break out above it, the measured move gets here. And guess what? Guess what? If we get up here, we're just confirming this bull channel. Then you got to find ways to sell back into the channel. Should the bears be strong and we sell off, they want to take out that previous low and that higher low double bottom. So because of trading range behavior, when I'm looking at this market, I am looking for ways to short. If I don't want to trade it during this coming week, because of the holidays or whatever, I'm just going to wait for these extremes. So no, when it gets to the middle of the month, something's going to happen, like in way to take those trades. So you don't have to jump into the market every day. By default, I jump into one market, but I know where it's going, not where it's going, where it's likely to go. That's Hang Seng 50. Everything else I can just watch and see what happens. Even Hang Seng 50, although I'm looking at it, I don't have to take trades. I'm happy to sit all day, have coffee, walk around, use my dumbbells, and just, there's nothing. There is, we are in there. And we just carry on with it on the daily. So beautiful double top, failed breakout signal. Tomorrow for me, this market is worthwhile to have a look and see if I get a decent enough pattern to break out beneath this low. This is a beautiful signal. And because of the trading range behavior, that one bad doji that's controlling the market, happy to go with it. If it starts to reverse, I'm out. Like this could have reversed and you get out there, depending, of course, if it takes place in the time that you are trading. But I'm going to be looking at this bright and early to see if I get a gift. A gift is a pattern that I'm happy to teach my daughter and say, there is a pattern. When you see that breakout, pullback, lower high, wedge, top, lower, trade. That's how you got to trade. Simple. Don't just get in there and get frustrated and lose money. Wait for things to set up. All right, guys, we are right at past. Let me see if anyone wants to look at. Oh my goodness, Terrence, I gotta find GBP New Zealand pound kiwi. All right, I'm gonna find pound kiwi. This is like what do they call this? Open book exams, right? Hey, there it is. Sure. I don't have to struggle to find it. Let's put pound kiwi in. And let's just, you can use whatever colors you want. My daughter is 11 now, and I think I've kind of showed quite a bit about trading, what things mean. Spent a long time with her when she was 5, 6, 7, 8, growing up. So yesterday I was sitting with her and I said, listen, I'm going to give you an open book exam. If you get it right, give you a little gift. And I opened up the charts and I said to her, which are the bulls and which are the bears? Here I am, a proud father. She says to me, I think the bulls are red. I said, what? How can you say the bulls are red? I've taught you for so long. She says, I know you've taught me, but why do you say that they're green? I said, well, the bulls are green. I said, but why, Daddy? I'm like, I was caught. And I said, well, okay, yeah, the bulls are green because think of if you are farming and green things are coming, so green is good. And bears is when there's blood in the streets. Blood is bad. I said, but what if I want to use purple or orange? I said, oh my goodness, you're growing up. Use any color that you want, as long as it works well for you. So, first thing you got to do monthly, before you do anything else, just go and mark the all-time high. If we ever get in that zone, you won't be surprised. It's going to pop up. All-time high. Then all-time low. So these you just leave. I can assure you, if price gets to these levels and you've got them marked, the opportunities that you see will be incredible because you won't be surprised. Okay, then the next one I mark is the midpoint of the all-time range. So I just use my Fibonacci tool. So we kind of cover how to use all of these tools in the Wednesdays in the market, live trading profits, some of the courses, etc. So I'm just kind of hoping that you can know how it is. 50% of all-time range, midpoint of all-time range. There you go. Then just open it up and say, what else can you see on the monthly time frame that is absolutely critical for you to see on the lower time frames, so that you are not surprised when the market starts reacting at a particular level. So I don't like cluttered charts. So you can mark many things, but just mark the extreme high and low that you can see. I should have read that first. So this is high of March. (2020) or high of 2020. Let's just call it high of. That's March 2020. And another key level that you want to mark, of course, you can see that's a key level. There's a lot of other levels in there, but let's mark the extremes that are standing out for us. Okay, George, this is the low of September 2022. You know for a fact, this is one of those 100%. You know for a fact when the market gets to these levels, something is going to happen. So 100% certainty, something is going to happen. Bears will break out, pull back and test. Bulls will defend, double bottom, higher low. You know, at the top here, you know, bears will defend, double top, low, high, double top will fail breakout. Bulls will break out, pull back, high low. So you know that's going to happen. You don't want to be surprised when the market gets there. So those are the extremes. And then just looking at this, what else can you see? You can say, hang on, this market is going sideways, trading range, price, action. But in that sideways, there is another key level that I want to make sure. If the market gets there, I'm not surprised. This 2-bar reversal here, high of February 2022. Let's just mark it. High Feb 2022. Okay, that's pretty key. 2-bar reversal. The sell was triggered breakout, so that's, you know, decent enough reversal, lower high as far as the bears are concerned, and everyone happy with that. So we mark that, and within there we have a bear channel in this. So you connect lower highs, this lower high and that low, and then you just move the anchor down to here. So there is a channel that has been created. So if the market gets to test that level, then I'm going to be interested to wonder, hey, hang on, what's likely to happen here? We might have a breakout, might have a pullback, whatever the case may be. That lower high itself is pretty important. And that's October 2022. High of October 2022, key lower high in bear channel. Okay, so you've got your key levels marked off. There's, you know, other stuff, high of this, high of that. That is perfectly fine. Now, because we are going into the new month, okay, into the new month, you just have to worry about the previous month, which is March. And as soon as these levels are breached, broken through, back tested, get rid of them so your charts are not cluttered. But when you go and trade lower down, you need to have that because they have not been breached as yet. So high of March 3 and low of March. Now, what is distinct is that we are in a trading range. Is it a trading range, which means you have to expect that most breakouts are going to fail. Okay, trading range, price, action, markets gets to an extreme price to breakout fails. Right, get the extreme price breakout fail. We may continue to go down or continue to go up, but we'll go up in trading range behavior. So even if we get above this high, you can expect it to fail. Can expect it to fail, and maybe the bears will defend the trend line. And if we see that, reversal taking place on the daily and is set up for you because you've got all of these levels set up, then you must just trade them happily, go short with them. If the market breaks out beneath here and starts to turn, well, you can see every time we got beneath the low, the market turned, then we can look to trade in that direction quickly, going down to the daily. So you can see there's our channel line up there. There is a previous high, beautiful setup, bear candle, but because we are in trading range price action, if you're gonna wanna sell that, you cannot put your stop here. Okay, that's not a technical level to put your stop. You're gonna have to do a measured move and say, okay, I wanna sell that. So you're trading on the daily. I wanna sell this because I think the bears might get down to this level. Where do I put my stop? You gotta consider this trading range. We tried to break out or broke out above this level, which was February. There was a double top. Let's put it in, put it in. A double top, breakout, failed, we've gone sideways. So all of this gives me some clues. If I want to be taking a trade anywhere in here, knowing that the market is doing this kind of price action, the most conservative stop is up here, which would make sense because you're just close to the channel line. That's where you could put your stop. Or if you are aggressive and you're able to make quick decisions, if the market turns again, you can put on the 50% pullback. What I do when I do that, I do my risk sizing correctly. So if this says to me, you can sell 40 widgets of pound kiwi, I will still put my order 40 widgets pound kiwi because that's the correct risk sizing, but I can tighten my stop to here. So half, well, no, almost 2/3 off, 1/3 off of my risk, because I'm saying, well, I'm sizing correctly, but I'm not going to wait to have my stop hit. So if we get acceleration, the selling off quite nicely, fantastic. If we break this low, then I can tighten my stop from here to here. But if I get triggered and trading range behavior, we start to go sideways, it starts to go above, I'm relying on my stop, I can make a decision to get out of the market. So if you're going in tomorrow into this market, be aware of the trading range behavior, be aware that we are above. By the way, if you've not come across this, I use the 10 moving average to indicate the strength of a trend. So we are above the 10 moving average. So if you're going to go in and sell here, if I was to end this market, I would wait to see the bear acceleration, follow through, one more candle close beneath the EMA. Even though I could put my stop here, I wouldn't do that. I want to see follow through, a pullback of sorts. Then I can say, okay, we failed to break out above a double top. So the market went up once, came back, went up twice. We tried to go back 3 times. So this whole pattern here is a wedge 3 push pattern. I'm going to put it in quickly, just in case you're taking a screenshot of this. So that's a 3 push pattern. It's a nice reversal pattern. Market went up here once, went up here twice, and we tried to break out. Of this, that's to get our stop. Tried to break out here and failed, tried to go up again. So this whole thing is a wedge, it's a failed breakout above here. But there's something else that's interesting, which starts to, in my mind, to tell me that there is a possibility of a reversal taking place here. Okay, so 1, 2, 3. This on its own is a small wedge pattern. 1, 2, 3. So I'm going to put it in very quickly. Let's make this, change the color, make it red. And I will talk about that briefly before we go. So this failed breakout, so this is 1, 2, 3. So that's a huge wedge, but this failed breakout itself, failed breakout above there, is made up of 3 pushes. So there's a wedge there as well. Okay. So this is a strong major trend reversal, as we call it. Failed breakout above the double top, 1, 2, 3, big wedge. But at the point number 3, there's a wedge within, went up once, twice, 3 times. So if the bears are able to give us a bear candle tomorrow, following through from this third touch within number 3, that is very strong for the bears. Then all we need, whether it happens the next day or a few days later, is a breakout, pullback, lower high. If we get a lower high near, we've got to sell. That is where I would be selling. If you don't want to wait for all of that processing to confirm the strength of the wedge top, that's why we wait for that and the pullback. But you want to just jump in, then by all means do that. But your stop is going to be up here and nearest technical level is above the channel line. That's where I would put it, because I'm aware that if this doesn't hold, there's a little bit more workout to be done. The market might come back and go up a little bit higher. So that's how we'd work it out. So going into tomorrow, I'll probably be waiting, follow through candle, pullback, lower high. And Sam, we are spot on time. Because Red Bull. Thank you guys for the post. Hart, Terence, Sui, Robert Chu. Appreciate it, guys. Sammy, big hands up. Thanks for hosting. We've kind of pulled it through all the way to quarter 2. Appreciate it. We'll see you live trading profits, 6:30 p.m. Hang Seng, George, 6:30 p.m. on Wednesday, or we'll see you in my coaching sessions. Take care, guys. Really appreciate it. Have a good rest of a Sunday. Bye-bye.